Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Quantum Leap is a live trade room. It is a subscription service. If you want to find out more information about it, I'll put my contact information up before we go. Each morning we come together in this pre-market session to set up our trade plan for the day, take a look at the market macro to micro. Then we drill down to the structure and our levels and our targets and our main hypotheses for the day. Please read through the disclaimer. And nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. If you want to take a free trial in Quantum Leap, just send me an email at quantumleapfutures@gmail.com. There's no website. It's not a commercial venture right now. Give me a call on my cell phone, 647-545-8065. You will need a Skype account, but it is free. And then send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you want to see more of these videos, do search on YouTube for Quantum Leap Futures. There are probably close to 300 days of pre-market plans. You can see how we do it each morning, the same routine. And then if you like what we do, send me a follow at Crazy2 or a like. Okay, so let's talk about yesterday first of all. Well, let's get the news out of the way. First of all, this morning we had trade balance. Canadian trade balance came in minus 2.0 billion versus minus 2.6, and the U.S. trade balance came in at minus 42.4 billion versus minus 44.0 billion. So, a little bit better than anticipated, but pretty much within reason. 9:45, 15 minutes after the open this morning, we have final services PMI, and then 10 o'clock will be the big news, ISM non-manufacturing PMI and factory orders. We've got crude inventory at 10:30, and then, of course, we've got the FOMC minutes, which is going to be the big news today. So we've had a pretty wild time the last 2 days, first 2 days of the year. We were looking yesterday, our main hypothesis was a rotational day. I was looking at somewhere between that 91.75 and the 22, and 203.50 was our warning line, or 203.25 was our warning line for a test lower into the 1900s, possibly to take out the 92.25 overnight low that we had. But we were thinking if we held above the 03.25, that we'd get an upside bias to take out the naked VPOC and the overnight high at 2017. Well, main hypothesis of a rotational day with an upside bias certainly played into it. One thing to note is we had a neutral extreme the first day of the year, where we broke the IV to the low side and the high side and closed at the high, and that gave us a high probability of a rotational day, another neutral day. Remember, neutral days begat neutral days, and we did get a neutral day, which we were expecting. We just didn't get the extreme, and more importantly, a key stat that we trade off of, which is the 96% probability of taking out the overnight high or overnight low, did not play out. We had a low probability day in terms of only a 4% probability, but we did not take out 17 or take out 92.25. And the funny thing about both of that is we've got these two VPOCs that were sitting right there. Okay, so not only do we have the overnight high and overnight low sitting on top of VPOCs, they just didn't take it out. So they were really just balancing out. And there was a little bit of OTF participation, but not a lot. A lot less than we had, the Globex session on Monday or Sunday night, and the session on Monday. They really lightened it up. Now, we ended up with a hammer and a hammer. So typically this is a reversal pattern, a very strong reversal pattern. I think it's like 78% probability of a move continuation up. So I was looking for a move up overnight. Last night was a perfect example of how news, okay, can revalue the market. We had this sell-off. If we go to the session here, we had this sell-off, okay, happened here. And this was caused by the fact that North Korea supposedly detonated a hydrogen bomb. That is not good for the world economy. That's not good for anybody. That's not good for the world in general. So the market revalued itself, okay, the initial reaction, and then when we got into Asia, they kind of held it, and then when we got into Europe, Europe sold it off. Now, a good example of how different cultures perceive different things. So the initial sell-off, Asia, it's North Korea. European, oh no, and they took us down, and we hit the target, which was one of our main targets. If we broke below 91.75, which was that 76 and 74, and we made an overnight low of 71 and a quarter. So I'm going to talk about this a little bit more in depth, but let's go and start with our basics. I always like to do this. I always like to start with a basic chart with a 9 EMA, 20 SMA. I'm looking at where we are within the trend. Is the trend being violated? I'm looking for slope and separation. You can see in the monthly, great slope and separation. August to September, challenged the trend, violated it. October took it back. October took it back. November and December held, but December challenged it again. And then so far in January, we violated the trend again. So we're showing some weakness coming into this monthly chart. On the weekly, full-blown consolidation and weakness coming back in on this week. We had a couple of weeks in December, and then they had the little bit of a Christmas Santa Claus rally, and then the sell-off on the last week of the year, and then the continuation down so far this week is the first week of the year. So both the monthly and the weekly are showing weakness. Going to the daily, you can see this continuation. Now typically, we had a FUBAR Mr. Sneaky on the daily with a tech gap. Normally, again, like that double hammer, that would be a typical nice trade to take. I actually got long last night. I got in, got funded, and then got taken out. I actually took two longs and got in and got funded on both of them. The one trade I actually made money on, I forget where I got long, 1075, got funded at 1150, and I closed it, I think, at 1250 after it reached 13 something. But then I took another long at I think 375, 350 area and got in, got funded, and then luckily I put my stop to Theo and got taken out to Theo. Then I got short 97 and wrote it down. And Mr. Sneakies are coming back into play. The probability and expectancy on the Mr. Sneaky, especially a FUBAR Mr. Sneaky, is starting to rise to the top of the crop again. So we're going to talk about that today during the trading session. But the problem with this, the reason this doesn't work out, there's always a probability against things working out, was the news revaluation, and the news took us down overnight. That's not good. So we've got continuation to the downside so far on the daily. On the 4-hour, you can see that we had a beautiful downward trend, created the technical gap, came up and closed the tech gap, and then yesterday was just rotational. It looked like we were going to close back above the 9 and get the move to test the 20 and get a reversal pattern, and then we had the news, and you can see that this is very strong downward trend right now. But we are creating a possible foo-bar right here with the tech gap. So we're going to keep a close eye on that during the course of the trading day today and see if we get a bit of a reversal. Key line in the sand below us now is going to be that 67.75. Above us is the 91.75. It was one below us. It is now above us. Going to the 1 hour, you can see again, same thing, good slope and separation. We've got a naked cross here on the 1 hour at 2004.75. So just mark that in your journal. But the trend is down. Going to the 30-minute. This naked cross was put in and taken out just as it was put in, so that's an invalid naked cross. And we've got good slope and separation, getting a bit of a technical gap, but we'll probably close this through time more than anything. But on the 30-minute, the trend is down. And then on the 15-minute, same thing. We're challenging the trend right now. We close this technical gap here. But they're having a hard time holding above the 9 right now, but the overall trend is still down, but it's being challenged. And then on the 5-minute, we had strong move down. They closed the tech gap, failed again, moved down. There is a naked cross right here at 70, I'm going to call it 79, 75, call it 78, 2078. And we've rallied a bit. We've closed above the 9 and the 20, but coming down and challenging again. So we are challenging the trend, but so far it's a week. So coming into the RTH, we got a little bit of on most time frames weakness, but starting to try to find a base. So let's take a look at, I want to just talk about this for a minute. Let's talk about this a little bit. This revaluation down, and I was lucky. I got short on the break of the VWAP and the break below. Down here. I took the short below the 97. I was targeting the 92 area, and we got a nice move down. Here's a nice foo-bar, Mr. Sneaky, that actually got me out of the trade. I moved my stop down to the 89.75, and I got taken out at the 89.75. But you can see how this was a beautiful. If I show it to you on the with the 9 EMA, it was a beautiful foo-bar tech gap, Mr. Sneaky. And then they found value, and then here again, and Mr. Sneaky, and a rally back up, and then this latest rally came off of a Mr. Sneaky as well. There's the move down, there's the Mr. Sneaky, waiting for the low to be respected. Low is respected on this bar, and you could have taken this bar long up into here, back into the VWAP, but I mean VPOC, but the VPOC I don't think had shifted there. The VPOC was sitting up here at 90 and just shifted down just in the last, I don't know, 30, 45 minutes. So we'll have to keep an eye on the fact that we've got a VPOC shift. There is a LVN here at 84.75 you want to pay attention to. Of course, we want to pay attention to if we get above there, I'd be looking for a move up into that 92, and we'll talk about why, but let's take a look at the big picture first. Now, as I said, this was a reversal pattern, and we should have had a move, technically a move up. But news came out, revalued the market, and they sold it off. They broke that 91.75, and they came down and to this gap down here at the 76.75, pushed it a little bit lower down into this CHVN here at the 71 area, and so far they've rallied up. We're going to open up somewhere down here. Now this is going to be a huge gap down and not likely to close the gap up here. So I'd be looking for, our daily ATR right now is 32.76. Our 20 period daily ATR is 32.76, and we've already broken it. We've already had a 42-point range overnight. So that's a big range. Our gap is actually going to be, if we opened up right around here at the 76, our gap is going to be, where did we close? We closed at 2012, and we're trading 1976, call it 50. So that's 35-point gap. Divide that by 2, and then add it to what we're trading, 1976.50. So a half gap fill is going to be back up somewhere in around the 94 area. So this 91.75 is going to become a very important factor to us above us. Below us, we've got the 67.75 as our key line in the sand, and then our major support we've got to hold below is all the way down here at 41. Our next big destination is down here at 44.75. So if we break 67.75, I've got targets at 62.50 and 52.50, but the big target below is still down here in the 44.75. This is going to be a psychological break here at 67.75. And then if we break the 41, then I think it's all over. And we're going to get a bigger move down into this lower distribution. We've got a lot of unfinished business here. This is a distribution zone that has undetermined fair value at 24, 20, big target at 15.25, 13 area, the 06, and of course the 1900s and a test of the 1900s. So if we can't hold this 41, then we've got strong attractions because we're back inside of this longer term micro composite. And you can see that going all the way back here to this micro composite here, this area around the 20 and 15 area is very strong. So they're probably, if they break the 41, we're probably going to have to come down into this 15 area to find buyers with any conviction. So we got two key psychological areas below us, which is the 67.75. Remember, our weekly ATR downside target off of that 2043.50 is 1966. So we could break the 67.75 and we're still within the weekly average true range. But if we break the 41, that's why I'm calling this major support, key support, break the 41, psychologically, the bears are going to get very aggressive and they're going to have to find buyers. And I don't think the buyers are going to step in until we get down into the lower teens here. So if we can hold this 67.75, even maybe a dip into the 66 area, maybe 62.50, and then break back above it, then I think we'll work our way back up. Okay, there's a, they called an emergency meeting to the UN today. Whatever the Fed was planning on announcing in terms of the minutes might be being readjusted. I think that they're going to try to come out very dovish on these meetings, and so I think we'll try to work our way back up towards that 91, possibly the 94. It's going to be a very challenging day because the market's going to be very skittish. So be very careful today. Let's take a look at the overnight and start putting our levels in. I know I'm going a little bit long, but there's lots to talk about. So our overnight low is down at 71.25. Our overnight high all the way up at 13.25. Our overnight VPOC has shifted down to 76, which is basically right on this gap fill. So we've got an LVN here at 84. So I'm going to use the 84.75 as my key trade area above right now. Our daily ATR target's already been violated, so we're in range expansion right now on the daily range. Our average true range right now is 32.76. Off the bottom, 1971 and a quarter, 32.76 gives us a daily upside ATR target of 204. But we've already broken the downside, so we have to. The key thing this morning is to watch for initiative sellers stepping in and pushing us down. I'm anticipating that we're likely going to see initiative selling stepping in. We're going to take out this naked gap and this naked VPOC on the open, possibly push down to the 71 and a quarter, test that 67.75, and then possibly start bouncing from there. So watch for that initial sell-off. If you see it, don't try to catch a falling knife. Wait for the support to come in and some type of consideration to get long. If we see two-sided trading, then we're likely to take out the 74 and the 76 areas and try to rally up towards the 80.50, 84.75. Anything above 84.75, then I'm looking for a move to test and take out this 92 area. We've got the key line in the sand. It's the upper distribution. I really don't need this anymore, so I can take this down, expand this out. So above the 84.75, look for them to test this this key line. You can see that the CLVN and the 2-day microcomposite value area low is sitting right there together at 91.75. So if we get above that, then we're getting back inside of the last 2 days value, and I would likely see us getting stuck in these two wicks right here, and probably chop back and forth up above and below this 91.75 as we get stuck in the wicks up here. That's if we can get into the wicks. So pay attention also to this 80.50, which was our daily range target down, to see if we get in these wicks. And then if we get in wicks, the first area you want to pay attention to is the 84.75, the key LVN from overnight, and then above that, a move slowly up into this 91, 92 area. If we can get and hold value at 92, look for them to push through to the 95. Remember that the half gap fill is going to be somewhere around that 94 area, depending on where we open. It's actually going to be a little bit lower because we're coming down again, and we're at 74, 75 area. So it's going to be somewhere between the 92, might even end up being a half gap fill at 92. We'll have to calculate it once we get the open. Once we're in above 95 and a quarter, I think they'll get aggressive and they'll push through to test the 2000s. The first target's going to be the 96.50, and then I'd be looking for them to come down and test the 2000 level. I'm going to actually use the IB low at 99 and a quarter. And then, of course, we've got the value area low at 2002. Above the value, getting back inside of value, that's already a big move. It's not outside of our average range. Our daily upside ATR target is at 0450. That's going to be a key area between the 04, it should be 0450 and the 550. So this whole area between 450 and 550, you've got to be careful of, but anything above that, look for a big move in a trend day up into the 2009. A little bit of resistance possibly coming in at the value area high at 11. Of course, above 11, you got the overnight high at 13. The more likely is we're going to take out this low and test this level down here. So my main hypothesis is to look for initiative selling or two-sided buying, selling with a push down to take out the overnight low, and looking for a bounce from here at the 67.75 or the 66 or the 62.50, and then a slow grind up. If we break the 62.25, then I'd be looking for a push down further into this 52.25, and then of course the next big target is this 44.75, and then our major support below is 41. I mean, we could see it today, gang. It's possible. I mean, the market's going to react further once the RTH session gets open to what's going on in Korea, and we could get further news. Don't forget, we've got FOMC, although I think they're going to adjust the FOMC no matter what it was going to say to sound very dovish to try to hold this market up and not get all out panic and a major sell-off. Above the 91.75, I'd be looking to buy the longs. I'd also look to buy the bounce down here, but in the most part, you're probably best to be trying to sell rallies today, because every rally I think is going to be met with skepticism unless we get very, very strong OTF participation. We possibly get plunge protection team stepping in, and they're buying everything in sight. So going to be an interesting day. Keep it tight, keep it light. If you're struggling, don't bother trading. These are the types of days you just want to see how the market reacts, especially with we've got headline news and headline risk, as well as FOMC. So and other news as well. Right now we're holding the Keltner center line at 75.25, sitting on the VPOC at 76. A move to test the upper Keltner line is going to take us up into that 81 and test that 80.50 level. A move below the Keltner center line is going to take us down into that 69, and I actually think it'll be 67.75, 66 area by the time we get there. Taking a quick look at gold. We made the move up. We were talking yesterday that if we got above the 79.90, that we'd likely come up and test the 89 level, and we have tested it. So gold is starting to test above the value area. Remember, our long-term microcomposite value area on gold right now is at 81.30 down to 62.20. We've been chopping around in there, testing both sides, and here we are testing the upside yet again. If they break the 89.25, break out of this range, first resistance going to come in at 92.80. But I'd be looking for a move up into this 94.80, and then a possibility of continuation up into 1100. Anything for 1100, look for the rule of 10, with the first target being the 1106, but main target being 1110, and this and a little bit further up into this CLVN at 1112.40. If we break back inside of value and we test this 79.80, watch for a bounce. If they don't bounce, then you could take the short into the 73.90, more likely back into the 70 area. The microcomposite VPOC has shifted up from 70 up to 72, so they did accept value higher before this push up. Anything below the 70 level, I'd be looking for a move down into the longer term price acceptance around the 67.50, and then you want to see the 66, 65 area hold. If it doesn't hold, they'll test a lower value area at 62.60, and there's not much holding us if we cannot hold this value. So this is to me, this is the last gasp of the buyers to hold this for a rally up. If we break the 62.20, I really think that this time there's not going to be much holding us up. All depends on what goes on in the market, in the indices as well. Okay, that's everything that I got. As always, trade well, trade safe. I will catch you on the open. Just going to shut the recording down.